Hello traders, this is your host and once again welcome to the YouTube channel of Forex Planet. Hope you are all doing good. As you can see, this is the chart of gold, and before starting the video let me share the report of today. So basically this is our close trade of today. Almost we earned $6.18 with the minimum lot size. Okay, so yes, we gave two signals today. We gave a buy signal from 72728, and I am not feeling ashamed to tell you that yes, we have hit the stop loss today, and the second signal we have hit the TP. Okay, so yes, the market was very unstable and this happens, so no issue. This is the part of business, and this is gold. Okay, so in my previous video, as I told you, it will break the parallel regression channel. Yes, I explained you in my last video. It will it will break the parallel regression channel, and the traders will think that, the investors will think that it had break the regression channel, and after that it will fall. Okay, so yes, I told you this, but unfortunately I didn't follow this in my group, and we have hit the stop loss. The signal was very good. We gave a buy signal from this spot to counter, but unfortunately this big candle has hit the stop loss, and after when I was studying the gold, I was thinking why it had hit my stop loss, and yes, I was mad. I saw that, as you can see, these are three candles, three bearish engulfing candles, three soldier pattern candles. After that I was giving the buy signal from that. Definitely the candle will be in the bearish direction, but unfortunately I forgot that. Okay, so this is the chart of gold, and first of all, let's start with the daily candle. Many things to discuss here, but we will try to find out step by step. Okay, the daily candles was very important. Why? Closing. This closing was very important. Yes, I was thinking that the gold will make some correction, the gold will do some correction, but unfortunately it did it very late. Okay, so first of all, the main zone, let's draw our main zone of support level as well as resistance level, which is collectively known as beast zone. Okay, so by applying the daily candle, we just got a support as well as a resistance zone. So let's move to H4. According to H4, there are two conditions, as I explained in my earlier video. Now we have again a support level here. Okay, so I am going to draw a support level. Okay, now we have two support levels here, and market is moving zone to zone right now. So when I was applying Fibonacci, the target was 2762, but unfortunately market didn't hit the target, and before 30 pips movement it fell. So what's next? The main question is what's next. Let me change the candle to H1 candle so we can find out more opportunities. So if I am going to apply the regression zone, yes, definitely it is broken, but it is still very important. Okay, so let's change the color of regression zone. So okay, red candle, so again change its color to any new color, the blue one. Okay, what will happen next? Now we have again a support level, but from downside it will be act as a resistance level. This is the resistance level, and this is the support level, and this is known as resistance level. So let's draw a resistance level and change its color so we can differentiate the different zones. Yes, as you can see, the pattern is very similar. What is going to happen next, as you can see? So first of all, let me explain to you what is head and shoulder pattern. Okay, so this is head, and this is head, the main one, and this is a shoulder. And as you know, a human have two shoulder, so it will form a new pattern like that. It will form a head and shoulder pattern like that, and then it will fall. Head and shoulder pattern can be of two types like that. Okay, so as you can see, we have this structure and we are waiting for that double one. So let me show you an example of head and shoulder pattern. As you can see, I have already searched the pattern. This is head and shoulder pattern technical analysis, and as you can see, there are two shoulders and one head. Here we have one shoulder, one head, but waiting for the next shoulder. One more thing is that the market, after forming a head and shoulder pattern, it fell. It will fall definitely. If it is moving, it is forming the reverse head and shoulder pattern, then it will go up. But now this is the perfect head and shoulder pattern. After that, the market will fall. But here the head is complete, one shoulder is complete, and we are waiting for the next head and so we are waiting for the next shoulder. First of all, the pattern is very similar. The gold can retest this trend line 2710 area, and then it will go up to retest at the zone 2740, or maybe below the 2740 area. So after that, it will form a head and shoulder pattern, then it will come back and it will reject its H4 support level. This movement is very popular, and as we are waiting for the movement, the head and shoulder is very popular. So buying condition is very risky now because market is correcting itself. So buying is only possible if market somehow go break this zone with a large H4 candle that will close above the zone like that. Let me draw it green. Okay, so suppose the market is going up slow and it will given a closing of H4 as well as an H1 candle. Anything is possible. So if it will give a closing of H1 candle above the zone, then we can say that the market will retest this area again, and if it will break this, then we can buy. Buy is very risky. Buy is not going to be very easy. So there are two conditions for buy. The market have to break the zone first of all with H1 or H4 candle, then market again have to break the zone with H1 or H4 candle in the upside direction. Then we will consider buying. The buy is very risky now. So similarly, what's the condition and what's the pattern of gold? Let's try to find out. Simply, if H1 candle or H4 candle give a closing below the zone like that, it will go upside to retest. Retest is very important. Let me show you why. Here, as you can see, let me zoom out the chart. As you can see, this candle gave a closing below the zone, but the big bearish candle has tested this candle twice. If you will see the M30 candle, then you will find the reason. This M30 candle hit this area twice, which means retest is very important. So like that, the retest is going to again be crucial. If market break this area in the downside, then it will go up to retest and then it will come down. So it will come down after some time, and the next possible moment is that you can take a buy entry when market will hit, and your stop loss will be here. Keep in mind that your stop loss will be below the two red bearish candles. Okay, so the stop loss will be here. It is a stop loss of almost $15 candle. So we are going to buy it in this scenario. Otherwise, if the market rejects this area like it is rejecting here, then you can buy. If one candle break the zone, then there is no buying from here. We will buy the final buy from that zone. Okay, so now it will go after. If it will reject the zone, yes, like that, it will go up and it will make a head and shoulder pattern, then it will come back to this zone. The selling is very proper now, and it is falling a proper setup, but buying is only possible once market break this zone, and after it will break the all-time high position, then we can think about buying. But now the market is in the bearish pattern, because it is moving with a strong bearish momentum and it is correcting itself for a big bullish movement. So yes, part of market, try to open a lot when you are going to buy with a small lot, and set your stop loss properly, and this ultimately a buying zone from here. So if I draw a chart what is the movement, then it will show like this, then it will make a head and shoulder pattern as I have explained to you. This is one shoulder, okay, this will form a second shoulder here, and this is head. So it will always follow with a proper setup, and this is all about gold. If you have any confusion, again we are here. And in the last, please subscribe our WhatsApp channel and also join our YouTube channel for more videos. Thank you.